Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. Bitcoin has broken down from a 50-day long uptrend. In today's video, we are going to be discussing the significance of this breakdown, the potential for a bearish divergence to develop on the weekly chart, what this will mean for the macro direction, and exactly what needs to happen for Bitcoin to continue upward into a new all-time high. We are also going to be taking a look at the altcoin market and of course the total cryptocurrency market cap, as both of these charts are getting close to retesting some critical levels of support. Before we get into it, make sure to smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in taking your trading to the next level, you can join our VIP channel. To do that, click the pinned comment of the free channel. We do have a end of month sale on at the moment, so you can go ahead and check out all information, clicking the links to find our entire membership detail and our entire trading track record. You'll get access to two main channels: the main VIP channel where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis, including access to a multitude of group chats with all of our members. Go ahead and check it out and we'll see you in there. Let's dive on in. So as we can see, over the past 24 hours, Bitcoin, it has broken down from this critical diagonal uptrend. Now, this diagonal uptrend represented the overall trajectory of the trend for Bitcoin since the beginning of April, so around about 50 days to be exact. And we have broken down from this trend line, which signifies a pretty significant shift in the direction of the market, on the short term at least, and this has the potential to develop and extrapolate to a higher time frame. And as we know, with Bitcoin sitting just above those prior weekly highs with a potential bearish divergence developing, this may be what triggers a larger correction. So we need to be very much aware of how this short-term breakdown can go to impact the higher time frame charts and what that would suggest on the macro direction for Bitcoin. But with that bearish talk, we're also going to be taking a look at, well, exactly what needs to happen for Bitcoin to invalidate this breakdown and then continue to new all-time highs, and again avoiding a potential bearish divergence. So a lot to cover today. Let's jump right into the market data to start with. 24-hour volume down 16%, 240 billion over here, so still relatively high. Liquidations 223 million, down 21%. Of the 223 million, 170 million have come from long positions and 53 million have come from short positions. Moving over to the DXY. The DXY sitting around that range low level, around that 100 level. We were expecting a continuation lower, but of course we did have the minutes meeting a few hours ago, and the Federal Reserve essentially have come out and said, well, there is still a lot of uncertainty around tariffs and around the direction of the economy as a whole, and therefore they are standing true to what they expect with interest rates, which is they're moving into uncharted territory, uncertain territory. And with that, they do eventually expect interest rate reductions, but they can't provide any direct clarity into when. So that more bearish tone has resulted in a bit of a jump up here for the DXY. Looking at incoming economic news, we do have, of course, our PCE, personal spending, personal income data coming out in around a day. Now, this is pretty good for inflation. It is leading for inflation data, so we're paying attention to any dramatic shifts in that. Moving down, we don't have anything really until the 6th of June, where we then have our NFP data and unemployment rate data, which generally has a pretty big impact on the short-term direction of the market. So not too much over the next week. Moving over to the S&P 500. The S&P 500 saw a bit of a bounce back toward the upside over the past 24 hours. Now, as we have mentioned, the overall expectation for the S&P 500 is that while we are sitting above this 5,700 level, this horizontal gray box, this major support level, the overall direction is going to be upward. If we are looking for new all-time highs, for us to see new all-time highs, we need to get and close above this current level, which we are retesting, which sits around this $6,000 level, this change of character region. We can see we are currently retesting at the moment. So if we're able to break through here, it is highly likely the S&P 500 will continue to rally, and the overall narrative we are watching at the moment is that, again, above 5,700, we are macro bullish. Below here, we then run the risk of these corrections. So pay attention to that high time frame support. That is it, guys. Let's jump into Bitcoin. As we mentioned, there is a heap to discuss today. So before we get into the crux of today's analysis, make sure you go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll go ahead and support me making this content on a daily basis. You'll support yourself in your trading journey, trading on exchanges I trust, and you'll get a very hefty 15% to 45% lifetime trading fee discount based on your trading volume. Check it out. We'll play an ad and we'll get right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump back into it. And I want to start on the total cryptocurrency market cap and the total altcoin market cap in today's video. So starting on the left-hand side over here, the total cryptocurrency market cap chart. Now, we've been discussing this diagonal uptrend now for a few weeks, and the reason we've been talking about it is because, number one, it is acting as a trend defining point, signifying again that we are in a macro uptrend and the probabilities are in favor of continuations until the trend breaks. And number two, of course, it is going to act as a trigger point for potential trend reversal. We can also see that when we have these extended multi-week, sometimes multi-month long uptrends that have aggressive trend angles. We're talking about the trend angle as simply the angle of this trend. The greater the angle, the steeper the trend, the more aggressive these trends, we always do run the risk of these trends breaking and resulting in one of two things. Number one, horizontal consolidation to absorb selling pressure as a consequence from exhaustion developing nearing the end of the diagonal uptrend. Or number two, mean reversion after what has been a large rally to our 50 or 200 moving average, resulting in again hopefully higher lows, thus then continuing the trend. So in essence, we do eventually expect this diagonal uptrend to break on the total market cap, just as we've been saying we expected the diagonal uptrend here on Bitcoin to eventually break. The question isn't whether or not it will break. The question is, what impact will we see the market sustain when it does break? How will the price react? Are we going to move into horizontal consolidations and absorb the selling, or are we going to see mean reversion and then higher time frame corrections, potentially developing a macro sell signal? These are things we are discussing in the video. So let's jump into the total over here and start off with the first piece of the puzzle. The total cryptocurrency market cap simply is a representation of whether or not the crypto market as a whole, so Bitcoin, Ethereum, altcoins, they're in a macro uptrend or a downtrend, a bullish or bearish. Simple as that. As we can see here, while the total market cap is able to sustain above two very important levels. Level number one, we are watching the diagonal uptrend. Level number two, we are watching the point of confluence the diagonal uptrend has with horizontal levels of support. The most nearest one is going to be this level at around 3.33 trillion. The loss of these levels will signify a potential correction is going to occur for the broader cryptocurrency market. Meaning, if we see the total market cap drop below this level, the probability that Bitcoin will go into a corrective move rather than a consolidative move increases. So the horizontal consolidation and absorption is unlikely in comparison to mean reversion towards the 200 moving average and then potential a red weekly candle close. And we'll discuss why that's important when we get up to our weekly analysis. So taking a look at the total cryptocurrency market cap, we can already see with this rising price, we are starting to see the momentum drop, okay, both on the market cipher and of course on the RSI, signifying that we do have exhaustion developing up these highs. Sellers are either stepping in or the buyers are stepping away, allowing for again the selling pressure to begin to increase over the buyer's strength. This is resulting in a bearish divergence and the price action moving more towards these horizontal levels of support. If we break below this level, we are watching corrections back to 3.21 trillion. This is going to be a very high time frame level of support. If we drop below here, that is when we are in danger for a steeper correction back to 3 trillion, potentially the 200 moving average. So worst case scenario, guys, we do see a drop back to the 200 moving average. Hopefully we see a rebound on 3 trillion. Best case scenario, we drop below this support and bounce at this $3.21 trillion level. If we do manage to do that, it is unlikely Bitcoin will drop anything lower than that 200 moving average on the short term, okay? It is unlikely we'll drop below 100,000 if we see the total cryptocurrency market cap sustain above this 3.19 trillion. So only if we drop below 3.19 trillion do we run the risk of a sub 100k correction for Bitcoin to that 200 moving average. So we need to be aware of that. Let's talk about the flip side. For Bitcoin and the cryptocurrency market to continue upwards, as we have mentioned, our most recent top, this local top, is acting as the trigger for a continuation higher. So essentially short-term bearish while we remain under this level. If we break above this level, we then expect continuations back into our all-time high range. And again, Bitcoin will be in new all-time highs. As this occurs, we will see the altcoin market continue upwards, and we will likely see a breakout for the cryptocurrency market cap, resulting in that expansionary move into the end of 2025. So that semi-parabolic rally, okay? Those are the directions, and that is the analysis of the total market cap. Let's get to the altcoin market. The altcoin market is looking again as expected. It's not really doing anything unexpected over here. As we have mentioned over the past couple of weeks, we are not expecting anything snazzy from the altcoin market cap while we remain below the $940 billion level and the baseline of the Ichimoku cloud. While we sit between these levels, just expect sideways chop, meaning some altcoins will do better than others, some altcoins will drop, some altcoins will go up. There's just going to be a whole mix of performance of the altcoin market. Okay, it's only when we break above 940 billion or below the baseline are we going to see strong directional moves to the market. So if we break above 940 billion, we will see a strong move up for altcoins, 30 to 50% rallies for altcoins. If we drop below the baseline, we could see corrections back to 840 billion, which is about a 10 to 20% correction for most altcoins, okay? So no major moves until these levels are broken. We will likely have the odd altcoin doing exceptionally well day in, day out between these levels, but we're looking at altcoins as a broader market. We're not expecting anything amazing or terrible until these levels are lost. Let's jump over to Bitcoin now. So as we mentioned, Bitcoin is breaking down from its trend line. I actually want to come back to the short term at the end of the video, because I think it'll be more important if we discuss this at the end. Let's jump over to the weekly chart. Now, as you know, guys, the weekly chart, we have got a whole bunch of indicators here, a whole bunch of levels that are acting as invalidations, acting as triggers, acting as warning signs. Let's break it down real quickly from a weekly basis from our horizontal levels. So first and foremost, while we are sitting above this prior weekly high, which is going to be 104.4K, the overall expectation is that we are above a prior high, and thus this level is an area of support. If we are able to drop back below this region, this will be marked as deviation. When we see a deviation range break, okay, or should I say a deviation above a prior range high, so an unsustained breakout with a bearish divergence, the probabilities of this being the local top and thus resulting in a reversal massively increase. So at the moment, that is really the big risk of the market. If we're talking about, the potential risk or the potential warning signs that we need to pay attention to, this is really the big threat that could push the market down, which may develop that we need to be paying very close attention to. So if we see a weekly candle drop below the weekly range high, that will confirm the fact we have seen deviation from the prior high, simply suggesting that the market did not deem this to be a level of which could be sustained. The buyers did not find value at this region, and the price has pushed back down, likely into lower levels of liquidity, where demand will then be found again before the price is able to reverse. This, again, is a massive sign of exhaustion and weakness. And when we extrapolate that to the higher time frame with bearish divergences, the potential for these corrections to play out massively increase, as we just mentioned. So this is a big risk. Now, that is just one warning sign. If we're taking a look at a second warning sign, we have got the 62.09. As we mentioned, every time we break through the 62.09, we see a weekly uptrend. The same is said that when we break down the 62.09, such as over here, and this is one instance we saw a downtrend begin, okay, over here, we saw a downtrend begin. We generally see steep downtrends initiate. So again, if we drop back below the weekly range high, the potential for our RSI break below 62.09 plus the bearish divergence, plus the deviation, significantly increases the risk of a higher time frame correction. Now, you're probably wondering why we even talk about this. The reason we're talking about this is because the first step for any of this to start to develop is the breakdown of this 50-day uptrend. Now, whether or not, we've already mentioned, the 50-day uptrend breakdown will result in horizontal consolidation or mean reversion, which could develop into this higher time frame weakness, is another question we'll answer when we get to the short term. But it's more important about identifying all potential possible scenarios, okay, and having plans for these scenarios so you can execute these plans and always be ahead of the curve, right? If you're unaware, if you're blinding yourself to 50% of the potential movements in the market, if any of those potential movements occur that you have not been aware of, you're going to be acting late, you're going to be acting emotional, or you're going to be not acting at all and hoping you end out on top. And 99% of the time, it doesn't work in your favor, okay? If you fail to plan, you are planning to fail. It's a simple saying that everyone has heard of probably a billion times, okay? You need to plan for all scenarios. Even if you don't want those scenarios to play out, you need to be aware of them so you can plan for them in case they do, then you are prepared to react. So in this instance, do we want Bitcoin to drop? Of course not. It's great to see Bitcoin continue upwards, but we need to be aware of what impact this short-term breakdown may have on the higher time frame, and thus how this high time frame chart could develop more bearish, and then how we can react to that. So with that being said, guys, it's very simple. While we remain above the weekly high, while we remain above the 62.09, we are bullish. We expect the price to continue upwards. If we want to see that next major leg up for Bitcoin again, just as we need to see on the total altcoin market cap, just as we need to see on Bitcoin, just as we need to see on Ethereum, we need to see a breakout of the RSI toward the upside. Breaking this will be the parabolic trigger. So we're looking for a parabolic trigger, meaning again, the altcoin market cap rallies aggressively, the total market cap breaks through this $3.7 trillion resistance, everything flies aggressively to the moon. We need to see the weekly momentum here flip this downtrend. Flipping this downtrend will be the parabolic trigger, resulting in the final leg up for this bull market, in my opinion, taking us to the end of 2025. Let's now talk about potential higher time frame risks and then jump to the short term and wrap it up. So let's hypothetically say we break down this weekly high, we turn the bearish divergence that activates. Where could we go? Well, we'll look at the higher time frame trend. Again, just because a short-term downtrend is bearish doesn't mean the macro trend is bearish. The macro trend is bullish provided we remain above two levels. Number one, the 50 EMA, and number two, the upper band of the Gaussian channel. Now, the reason we are saying this, again, the upper band of the Gaussian channel we broke out of over here. This is our $32,000 resistance. This is our bear market trigger point, meaning when we broke through this region, we entered a bull market. We have been in a bull market officially ever since we broke above 32,000. The macro bottom happened at 16.2K. We saw a macro reversal resulting in a uptrend beginning, but the bear market resistance broke at 32,000. Since we have been above 32,000, we have sat above the 50 EMA and the Gaussian channel upper band perfectly. We have not dropped below this region. We have not closed below this region. Therefore, if we close below this level, either of these levels in the future, that will be a sign that the macro trend has weakened to the point at which a macro downtrend will likely take effect. Okay? Until that happens, the macro trend is bullish. So even if we see this, perfectly fine. Even if we see this, perfectly fine, okay? But when we're looking at the short term, it doesn't mean you can't capitalize on any move that occurs on the short term. Let's jump over to the short term now and discuss the breakdown. So as we mentioned, the 50-day trend has broken down. To put it very simply, we need to see one thing for Bitcoin to push higher again. And this is going to be the break of the prior change of character. For those who have been paying attention to the videos of the last few days, you would know we expected a breakout. We expected a target of this 110,600 level. We came shy of it by like $20, only like $15 we came shy of our target over here. But you can see already how this level, this prior level of support, becomes a future level of resistance. This is the resistance level we need to break through to facilitate a continuation into a new all-time high and to avoid any of these warning signs we've discussed from playing out. So if we want to see Bitcoin continue to a new all-time high, the resistance we need to break is 110,690, 700-ish, okay? If we break through this region, we expect continuations to new all-time highs. All of the warning signs we discussed will likely invalidate. We will likely continue upwards, potentially retesting that downtrend in the RSI, facilitating a continuation for the altcoin market and the total cryptocurrency market cap. Best case scenario, okay? That is what we want to see. That is best case scenario. However, we need to be objective. We need to be realistic. What are we seeing right now? Well, Bitcoin is broken through the diagonal uptrend. Now, diagonal uptrend breakdowns are not really enough, in my opinion, to be like, okay, it's over, the trend's going down, this is it, okay? We need confluence. Diagonal uptrends is just one level of confluence. We need to see structural levels break, meaning we need to see prior higher lows lost. And the most recent higher low is sitting right over here. The most recent higher low is sitting right over here. The exact level will come back down to retest. So essentially, we are moving in a horizontal range, okay? From that change of character to the higher low at around 106.5. If we lose 106.5, we can then be confident that this is a local top, okay? We're going to see a correction potentially to the 200 moving average, mean reversion to around 104,000, okay? Where we will either then find support, develop a horizontal consolidation, and absorb the selling pressure, facilitating a continuation upwards, or see higher time frame mean reversion, as we have mentioned to be a risk with the bearish divergence on the weekly and the weekly break of 62.09. So as you can see, guys, today's video is all about preparing, understanding, being aware, developing scenarios so you have the plan of action to take effect, okay? Thank you for tuning in. Have a fantastic rest of your day. We'll catch you in tomorrow's video. Hopefully by then we would have either had a break of this horizontal level, so we're going to discuss that further, or hopefully not, we just sustain. We want to see a break of the range high or the break of the range low. Anyway, guys, thank you for tuning in. I'll catch you guys in the next one. See you then, and bye.